This video is for educational and informational purposes only. Mutual funds and stocks talked in this video are purely used as examples. This video is not meant for advisory or recommendation purpose.
Hello everyone, I am Anish from Allies Blue. Welcome back to our technical analysis series. In this video series, we are going to explore various techniques and indicators used in the field of technical analysis. Please watch the entire video and do like and subscribe to the channel and hit the bell icon to get new video updates. To know more about the basics of technical analysis like support and resistance, types of charts and the other basics of candlestick patterns, watch my previous in the technical analysis category. In this video, we are going to discuss about the piercing and dark cloud cover candlestick pattern, its price action and our execution methodology in our trading system. Come, let's get into this in detail now. The piercing and dark cloud cover candlestick patterns are the dual candlestick pattern which can be used to find the potential reversal from an uptrend and downtrend. Piercing is a bullish reversal pattern and dark cloud cover is a bearish reversal pattern. And this pattern is similar to engulfing pattern but not exactly. The piercing and the dark cloud candle should be close as a 50% range of the previous candle's body. Then only we can consider this candle as a piercing or dark cloud cover candlestick pattern. For an engulfing pattern, in the candle should be closest above the previous candle's high. That's only we can consider as an engulfing. For a piercing, it should be closest more than 50% of the body range. Now let's see the piercing formation in a downtrend. Now you can see the price is completely in a downtrend. In the bottom level, we spot a demand zone. From that demand zone, we are expecting the price will go up, but we need some solid confirmation. Now the piercing formation is over there. The candle is closest above the previous candle's body range 50%, which means we can enter in the trade. Our stop loss is below the swing low with some gap and our target is in the higher level resistance or higher level supply zone. Now let's see the dark cloud cover candlestick formation in a uptrend. Now you can see the price is completely in uptrend. In uptrend we spot one supply zone. From that supply zone we can expect the market will reverse. For that we need some solid confirmation. For that confirmation we are using the dark cloud cover candlestick pattern. Now you can see the first candle is a bullish candle. The next candle, the bearish candle, should close us below the 50% body range of the previous candle, means we can consider this pattern as a dark cloud cover candlestick pattern. If the previous bullish candle's low is broken, that is our entry and our stop loss is on the swing high with some gap and our target is in a lower level demand zone or lower level support. Welcome back to our TradingView platform. Here we can understand the price action and the execution procedure of the piercing and dark cloud cover candlestick pattern. Now let's understand the price action of these both candle. For a piercing candle, how the piercing candle look like? You can see one. Just a moment. Extend. Yeah. Extend right, left. Okay, fine. So for a piercing candle, first there is one bearish candle. The bearish candle signifies there are more number of sellers are active in the specific time frame. And the next candle formed like this. It closes, opens below the low of the candle and closes the 50% above of the body range. You can see this body range is almost 350 points, means the candle should close above the 50% of the previous candle's body range. Now only we can consider this as a piercing candle. And this candle, the second candle signifies the more number of buyers are entered into the market at the specific time frame. Here there are two types of entry. The first type of entry is conservative entry. If you are a conservative trader, you can take your entry at the first candle closure. First candle open level, and you can take your target at the higher level resistance or higher level supply zones. And your stop loss will be in the swing low with some buffer gap. Sometimes the stop loss might be acquired. So for that we are taking the stop loss at the swing low with some gap. So now let's see the execution procedure in the real chart. Now we are in a Bank Nifty chart. Bank Nifty chart in a 15 minutes time frame. We said just spot a support over here. So now you can see the price is completely in a downtrend. The price is completely in a downtrend. You already know that. Now let's go to 75 minutes time frame. I just bought the supports levels only in the swing low. This is one support and this is one support and these all are the supports in the Bank Nifty charts, right? These are the supports in the Bank Nifty chart. So I shifting my time frame to 5 minutes or 15 minutes. I just make it into bar replay options over here. Bar replay options over here, right? So in a 5 minutes time frame, we have two indicators called piercing and dark cloud cover in a TradingView platform. I'm just taking piercing indicator in the indicator column, piercing bullish. Okay, here you can see added over there, and I shifted my time frame into 5 minutes. Now let's run the chart. Now you can see from that support we didn't get any confirmation from this both confirmation, but here you have a long leg doji confirmation. So this video also we already covered in our channel. If you want, you can check the playlist. And again you can see, yeah, here is the piercing candle formation. You can see the candles opens below the previous candles low and closes above the 50% body range of the previous candle. The 50% body range will be, just a moment, the 50% candles body range will be around here. This is the 50% body range, right? So it closes above the 50% of the body range. Here we have two options. The first entry is aggressive entry. The people who can take immediate entry means immediately they can entry. If the person is a conservative trader means they can take our entry at the previous candle's high. And the stop loss will be in the swing low with some gap. Swing low with some gap. And our first target will be on this level. Let's shift into 15 minutes time frame to identify the supports and resistance. Yeah, first target which is around here. Here you can see it's a support. After that the support is broken, it will become a resistance, and our second target will be on, let's move into 75 minutes time frame. Yeah, second target will be on here because it's a clear support. After that the support is also broken, and the third target will be on here, right? Let's see well it is work or not, whether it is works or not. Let's see. See, first target is achieved. After that you can see there is a clear rejection in our first target. You can see it's clear rejection, and the second target is achieved, and just wait for a third target. Almostly our third target is achieved, and next day the complete gap up and the third target is also achieved. This is how we can use the piercing candlestick pattern effectively in our trading system. Next we go with dark cloud cover candlestick pattern. For that pattern I am using some commodity script called silver futures. I am taking silver futures over here. So first we have to understand the price action of the dark cloud cover candlestick pattern. So here the price action is completely opposite side. The price is completely in uptrend. Uptrend means the candle formation will be in a bullish candle only. After that a small bearish candle open at the higher level of the previous candle and closes below the 50% of the previous candle's body range. This is the previous candle's body range, 50%, which is around here. 50% of the body range means which is around here, right? Closes above the below the 50% of the body range means we can consider this pattern as a dark cloud cover candlestick pattern. So here for this candle the price action is there are more buyers are in the specific time period comparatively to the sellers. If for this candle you can see there are more sellers are entered in the specific time frame, and the sellers are more strong because the sellers should closes the prices below the previous candle 50% means we can consider this as a valid pattern. There are two types of entry for this pattern. The conservative traders will take our entry over here. The aggressive trader can take the entry over here. The swing high with some buffer will be the stop loss. Swing high with some buffer will be the stop loss. Now let's see the pattern in. Now let's go to 75 minutes time frame to spot the support and resistance level. Here you can see some support and resistance levels in 75 minutes time frame. This is the clear one support you can get. You can see the price is given a clear supports from this level. After that this level is broken. Here we can looking for a short side opportunity, and resistance, some resistance are. This is also a clear support, right? After this support is broken, it will become a resistance. Now let's go to 15 minutes time frame. For that, for this candle, we need some solid confirmation, right? This candle, we need some solid confirmation. You can see without indicator, I can see this is the piercing candle. You can see the candle is opened above the previous candle high and it closes below the 50% of the body range. And now let's take the indicator. Before that, we just move into, yeah, let's take the indicator of dark cloud cover. Dark cloud cover. Now let's move into 3 minutes time frame. Yeah, you can see here. You can see here the candle open at the previous level, and you can take your, if you are an aggressive trader, you can take your entry at only this level and your short set position, and your stop loss will be on the swing high with some gap, swing high with some gap, and your first target will be on, let's move on to 75 minutes time frame, this level and this level. Let's see, first target is this level, second target is this level. Let's see whether it's work or not. The first target is achieved, and the second target is remaining. This is how we can use the piercing and dark cloud cover candlestick pattern in our trading system. Hope you all understand the price action and the execution procedure of a piercing and dark cloud cover candlestick pattern. See you in the next video with another interesting technical analysis concept. Until then, subscribe to our channel and hit the bell icon to get new video updates. This is Anish signing off. Thank you.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.